Hi folks, in this question what we want you to do is to prepare an income statement. So we've given you below some of the information that you're going to need, because don't forget, when you do the income statement, you're going to have to do a multi-step, which means you have to do the regular income statement that you're used to doing in your intro course to accounting, but you're also going to have a discontinued operation, which is going to affect the amount that you calculate for net income. So the multi-step income statement that you're going to prepare here has 3 sections. It's going to have income from continuing operations after tax, income from discontinued operations after tax, and then when you add those 2 together, you're going to have net income. And net income is always after tax. So therefore, we want you to do a full EPS disclosure, proper 3-line heading, which is company name, name of the statement, and the period. We're going to tell you to assume a 40% tax rate and that all amounts are pre-tax. And in fact, we will give you on the midterm, we will give you all of the amounts pre-tax. We give you the opening balance of retained earnings at the beginning of 2011 or at the end of 2010 is $68,000, and some activity as it relates to the common shares that were issued. You had some new shares issued on March the 1st of the year, and then you also had a common share dividend that was being given out on September the 1st. And the reason they gave you this information is because they want you to calculate a new number for weighted average common shares, or WACS. And you'll use that as the denominator in your EPS calculation. So notice here we've given you some account names, and you're going to have to decide which accounts go on the income statement and how do you display them. And then at the end in Part B, we just want you to calculate the ending balance of retained earnings. So let's begin. So now, it's a great idea if you have the question in front of you, because I'm probably not going to be flipping back and forth between the question and the solution. So it's a good idea if you have the question with you. Okay, so now I'm going to go to the solution. Oh, first of all, I guess I should probably look at this question. The best thing to do is to look at the account names and decide, are there any accounts that you don't need here to do the income statement? Well, sales returns, and discounts, you need those to calculate your net sales. Cost of goods sold will help you get your gross profit. Contributed capital, you don't need that, right? That's an equity statement account, an equity account on the balance sheet, so you don't need that. You need expenses and revenues. You need the gain on the sale of equipment, right? You do need the loss on the discontinued segment because that's part of your discontinued operation. You need the loss in the sale of machinery. Anything that says gain or loss you need because it affects income, right? Depreciation expense, you need that, but you don't need the cash dividends declared in the preferred and common. They affect dividends declared and retained earnings, so you don't need them. And our little buddy unearned revenue was put in here to give you something that looks like it might fit on the income statement, but it doesn't. It's unearned, and you guys learned in your previous accounting course that that's a liability, so it's on the balance sheet. So now we can start because we know which accounts we're not going to see in the income statement. So if you go to your income statement here, what do you see? 3-line title, company name, name of the statement, and for the year ended. Net sales, don't forget net sales is going to equal sales, which is $220,000, less your sales returns, which are $1,000, less your sales discounts, which are $10,000. Now, if you had sales returns and allowances, that would also get deducted. But we didn't have any allowances, so we have to put on our income statement our net sales, not our sales discounts and our sales returns. We kind of deduct them from sales, so we get net sales figure. We're going to deduct the cost of goods sold in order to get gross profit. And from the gross profit, we're going to deduct all of our expenses. We only have 2 operating expenses, so you'll set up a subtitle here for operating expenses and list them. You only have selling and depreciation, and you'll get a total of operating expenses of $23,400. You'll deduct that from your gross profit to get operating income. But we're not finished yet. In order to get our income from continuing operations, we now have to look and see, do we have any other revenues and expenses? And in fact, we do. We have interest revenue, we have a gain on the equipment sale, and a loss on a machinery sale and interest expense. So we're going to add our other revenues, our other revenue, which is 200, and we're going to add our gain, which is 4,000, and from that revenue and gain, which are credits or positives, right? That's 4,200. We're going to deduct 2,200 and 2,400. So we're deducting 4,600. So in essence, this is going to equal what? This is going to be your 4,200 in revenues, or revenues in equipment, less your 4,600. And that means you're going to have a negative, where expenses are bigger than revenues by 400. So when we add the loss to the income, we're going to get income from continuing operations, and that's before tax of 120,200. So here's where your tax rates come in now, because we said that your income tax expense is going to be is calculated based on a 40% tax rate. So if I go here, notice I've taken what's in this cell here, which is C20, and I'm going to multiply it by 40%. So I've got the formula up here, 40% times C20, and that's going to give me $48,080 that I'm going to deduct from my income from continuing operations before tax in order to get my income from continuing operations, which is after tax, of $72,120. Now, that's the first section of my income statement. Now I got to look at my discontinued operations. Now my discontinued operations, I'm going to show any of my gains or losses as a result of the sale of my discontinued operation on an after-tax basis, because income from continuing operations is after tax. So now the question is, how did I get these amounts in here? Well, what I did is, if I go back to my question, the question told me that I had a loss on operating my discontinued segment, and it also told me I had a loss on the sale of my discontinued segment. So now, if I have a look at my solution here started, and it doesn't matter what you take first. You can take the loss on the sale of the discontinued operation or the operating loss first. It doesn't matter. I decided to take the loss on the sale of discontinued operation first. And according to my question, that loss on the sale of the discontinued operation was $22,000. But don't forget, all of these amounts are pre-tax, which means I have to multiply that $22,000 by 40% in order to figure out how much tax I'm going to save. Now in this case, I'm going to save tax because I have a loss, and I can't pay tax on a loss, right? Because I don't have enough money. It's a loss. So I don't pay tax on that. In fact, I get tax back. So what happens on my income statement, what I'm going to do is I'm going to show it at $13,200. So this is really $22,000 times my 40%. That's going to give me $8,800, right? Actually, I should probably put it down here. Oop, I want 40% there. So this guy here, that's going to be my tax, right? So this 8,800 is how I calculate. This is how I calculated my tax, right? But I'm going to pay less tax. So this number here is actually my $22,000 loss, less the amount I'm not going to have to pay in tax, right? So this little guy here, I'll just put him in green. Right? That's how I get my loss on the sale of the discontinued operation after tax. So once I deduct the tax from the loss, and that gives me $13,200. I'm going to do the same thing here when I put in my discontinued operations amount for the operating loss. So this one here is the amount of the loss I incurred while I was operating my business as it was up for sale. So in this case, I'm going to go back to my question, and I'm going to see that that piece was $44,000. So I had a $44,000 pre-tax, don't forget pre-tax loss while I was operating my business while it was up for sale. So now what I'm going to do is I'm going to go back to my question, and I'm going to say, well, that $44,000 loss, on that I saved tax of 40%. So this guy here, we'll do this in, we'll pick purple this time. That's going to give me my tax benefit of $17,600. Well, don't forget it's a benefit because I have a loss, right? So in this case, how am I going to get this $26,400? Well, let's just highlight that guy in, maybe I'll take orange, okay? And that orange amount is going to be what? It's going to be $44,000, which is my loss pre-tax while I was operating my business that I'm discontinuing. But don't forget, I saved tax. I saved tax of $17,600, right? So on that loss of $44,000, I saved tax of $17,600. So now what do I know? I know that my net loss, okay, in total is going to be the $13,200 less the $26,400, which is my operating loss before, or my discontinued operations loss before tax, less the amount of tax I don't pay on it. And that's my $26,400. So when I add these two losses together, I get this guy, right? And that is, I better get it darker. What am I going to get here? I'll take that and bold it so you could see it. And that's the blue guy there, which is $39,600 loss, and this is after tax. So income from continuing operations is after tax, right? Discontinued operations, both pieces are after tax, so this is after tax. So clearly my net income, which is going to be my income from continuing operations less or plus my loss from discontinued, is going to be $32,520. Now if this happened to be a gain, then I would add it to my income from continuing operations and get a bigger number, right? But it's a loss, so I deduct it from my income to get net income of $32,520. And I'm going to use that to help me calculate my earnings per share figures. So I need this, so I'm going to do an EPS on this number. I'm going to do an EPS on this number, and I'm going to do an EPS on this number. I actually should do an EPS there, just so you don't think that that is the EPS. Do an EPS, and here the same thing, and do an EPS. So these are the three guys that I'm going to use to help me calculate my three EPS amounts. So now that I've got the income statement done, I need to do my earnings per share. And you'll remember that earnings per share, let me just put it here, EPS is going to be equal to what? Net income less my preferred share dividend, and that's going to be divided by my WACS, right? Actually, should make those caps. Okay, that's my little formula, okay, for EPS. So now what I'm going to do is I'm going to calculate here. We could see we're starting to calculate EPS, right? So I've got my $72,120, which is going to be my EPS, part of my EPS numerator for continuing operations. And before I go any further, just remember from class, we have three EPSs because we have three sections to the multi-step income statement. The first one I'm doing now is my EPS from continuing operations. I'm going to have an EPS from my continuing, my discontinued, and then my net income, right? So here's how I calculate A. I'm going to use my income from continuing operations because I'm doing an EPS on continuing operations. Deduct my preferred share dividend. So go back to the question. Do we know what the preferred share dividends were? Sure we do. Although they're not on the income statement, we know we declared some. It was $10,000. So I'm going to use that in my numerator and then divide it by my WACS. How did I get my weighted average common shares? Well, what I did is I went back to the question. The question told me for my common share activity during the year, what did I do? Well, I had common shares at the beginning of the year, 50,000, but then I only had those 50,000 shares outstanding till February 28th. Why? Because on March the 1st, I issued 5,000 more. So now on March the 1st, I had 55,000. So from January to February, I have 50,000, and then from March 1st to August the 31st, 55,000. Why till August the 31st? Because now on September the 1st, that's when I issued a share dividend of 5%, and I issued that share dividend on all 55,000 shares. So this number here, I'm going to get, okay, by taking my 55,000 shares that I had, right, at August the 31st, and I issued an additional 5% on that 55,000. So an additional 5% on 55,000 is going to give me, this guy is this guy, right? So I had 50, maybe I'll do it this way just so that you have a little better picture, right? So this 57,750 is the 55,000 I had, but based on that 55,000 I had on August the 31st, on September the 1st, I went ahead and I issued a bigger dividend, right? So what I did is I went ahead and I issued a 5% share dividend in addition or on those 55,000. So now I'm going to have an extra 2,750 shares out there, right? That number in the brackets is 2,750. Added to the 55,000 I had gives me 57,750. But now I got to weight it. So what do? First thing I know is that from January to February when I had 50,000, that was 2 of the 12 months. March to August is 6 months, and September to December is 4 months. But I also have to make sure before I calculate my WACS that I go back and give each of the previous periods the 5% share dividend. So I'm going to multiply it by 1.05. So that means the 55,000 shares that were only outstanding for 6 of the 12 months are going to, in addition to 55,000, get an extra 5% of the 55,000, and that's the same as multiplying it by 1.05. Some of you might prefer to think of it as 55,000 plus the 0.05 times 55,000, right? Which is the same as 55,000 times 1.05. That guy here that I've got here in purple is the same as doing this. It's going to give you the same number, but that's outstanding for 6 months of 12. So 55,000 times 1.05 times 6 over 12 is going to give you 28,875. Similarly, for these 50,000 shares, those shares were outstanding for 2 months of 12, but they also get the share dividend at 1.05, so 50,000 plus 5% of 50,000. So this guy here is 50,000 plus 50,000 times 0.05, right? So this guy here in, let me see if I could get in brown, is the same as this guy in brown. So 50,000 times 1.05 is the same as issuing a 5% share dividend on 50,000 and adding it to the original 50,000. So now this product, or this amount, is going to be the number of shares that would have been outstanding for 2 of the 12 months, and that's going to give me a WACS for 2 months of 8750. So when I add this column together, I'm going to get weighted average common shares of 56,875. So to calculate my earnings per share on continuing operations, I'm going to take my continuing operations income, deduct the preferred share dividend I declared, and divide it by my WACS, which is 56,875, and that's going to give me $1.09. For my discontinued operation, remember what we said. We don't deduct any preferred share dividends from discontinued operations because any shareholder, no shareholder is expecting to get income from a discontinued business that won't be here tomorrow, so to speak, right? So we're not looking at that, so we don't deduct it. So we take our loss of 39.6 divided by 56,875 to get an EPS on our discontinued operation of negative 70 cents. Right? So 70-cent loss on each share that we bought. And the only reason it's a loss or a negative is because you had a discontinued operations loss. If you had a discontinued operation income, or income from your deal, then it would be a positive. So if we add together the EPS from our continuing and our EPS from our discontinued, which is negative 109 plus negative 70, is going to give us positive 39. And we can calculate that the same way. Take our net income, deduct the preferred share dividend of $10,000 and divide it by our WACS, and that will give us 39 cents as well. So that's how you would prepare your income statement with the EPS calculation. And again, to do the EPS, you need to do a WACS calculation. But before we complete, Part B said to calculate the ending balance of retained earnings. Well, we already know from the question that we had retained earnings here at the beginning of 2011, i.e. the end of 2010, of $68,000. To that, we're going to add our net income and deduct any dividends that were declared. Now, don't forget what dividends go in here. You knew in the question that you had cash dividends on preferred and common, and don't forget those both reduce retained earnings. So there's your $12,000 in cash dividends, but you also had share dividends. Remember we said here that you issued share dividends of 5% on the 55,000 shares that you had, okay, at the end of August, which was August 31st. And don't forget, the question told you that those shares were now trading at the date of declaration at $5 a share. So if you go back here, it says the common shares dividend was issued when the shares were $5 a share. So we always take the market value at the declaration date to calculate the value of the share dividend. So I'm going to deduct the cash and the share dividend, which is $25,750, from my net income here to get my ending balance, should be ending without a B, ending balance in retained earnings of $74,770. So this concludes our income statement, complete with EPS calculation.